Welcome back to the deep dive.
Yeah.
So if you've been watching the market at all, especially anything in high-end apparel, you have probably seen this whiplash moment with Lululemon Athletica.
Mm-hmm.
I mean, the stock, ticker LULU, it's been just punished. It was down nearly 50% in the last year.
Yeah, a total bloodbath for investors.
And then all of a sudden, there's this major leadership announcement, and the stock it stages this huge, unexpected rally.
And that reaction, that optimism, is really the perfect hook for this, isn't it? It's this fascinating disconnect.
It is.
You've got investors basically placing this huge bet that the company's problems can be solved just by swapping out one person at the top.
Right. So the big question for us today is, are they celebrating a real turnaround, or are they just, happy to see the CEO walk out the door?
Exactly. And that is our mission here. We've dug through all the sources on the boardroom drama. We've looked at LELU's performance against the S&P 500, and we're going to try and figure out for you, are the problems here just about management?
A quick fix with a new face.
Or do these issues go much, much deeper than just what's happening in the boardroom? Because this isn't just about C-suite politics.
Yeah, no.
Lululemon is like this live case study right now in how tough economic conditions and huge shifts in consumer behavior like fast fashion can really shake even the strongest brands.
It's a battle between brand loyalty and just wallet fatigue.
Yeah, that's a good way to put it.
Okay, so let's start with the drama. The boardroom shakeup that kicked this whole rally off. The news dropped on December 11th.
Mm-hmm.
CEO Calvin McDonald is stepping down. But here's the weird part. It's not immediate. He's not leaving until January 31st, 2026.
Which is a very long runway. I mean, that's a full year-long transition.
Super unusual.
It is. It gives the board breathing room, sure, but it also kind of signals there might be some internal stress. And to manage that, they immediately appointed 2 internal execs.
Megan Frank and Andre Maestrini.
Right. As interim co-CEOs. It's a classic move to reassure the market that, the lights will stay on while they do the big search.
And despite the stock's terrible year, the market's reaction was, well, it was optimistic. The stock has been rallying pretty much since the news broke.
Which really suggests investors believe new leadership is the catalyst. They were betting against McDonald, not the brand itself.
It really speaks volumes about how unhappy people were.
Oh, yeah. And when you talk about that unhappiness, you have to talk about the guy at the center of it all.
Kip Wilson.
The founder. Lululemon's founder and still a major shareholder, a very controversial figure.
You really can't discuss Lululemon's corporate life without talking about Wilson. He's been so publicly critical of management for years.
And he absolutely seized this moment.
He put out a press release that was, it was something else.
He did not pull any punches. He just came right out and said McDonald was responsible for years of poor decisions.
And he called out lack of innovation specifically.
Mm-hmm. He's always hammering on that the product line has gotten stale, that it's lost that cutting-edge feel that built the brand in the first place.
And then he took credit. He actually issued this statement saying, and I'm quoting here, that it was only under my increasing pressure has the Lululemon board finally started to listen.
Wow.
That is just an incredibly bold, almost combative thing to say as a major stakeholder.
It is. It's a direct shot at the board. And what it does is it completely changes the game for the CEO search.
How so?
Well, he's making sure that whoever comes in next starts their job under this intense microscope from day one.
So what does that new CEO need then, given they'll have the founder breathing down their neck?
2 things. First, they need a rock-solid apparel pedigree, someone who just gets the business inside and out, sourcing, trends, all of it.
Okay.
But maybe more importantly, they need really thick skin. The new leader isn't just reporting to the board. They're going to be constantly defending every single decision against Wilson's public critiques. It's a pressure cooker.
That sets the stage perfectly. Okay, let's move from the boardroom to the actual data. It's easy to blame a CEO when a stock drops 50%, but we need to look at Calvin McDonald's whole tenure.
Right.
He took over on August 20th, 2018. So let's grade his performance from then till now, mid-December.
And that time frame is key because it covers a massive bull market. So if you look at Lululemon stock just by itself, the company actually did okay.
Shares were up about 50% under his entire run.
Right.
A 50% return.
Which, in absolute terms isn't terrible. A lot of companies would be happy with that over 7 years.
Exactly. On the surface, you hear 50% return and you think, okay, that's fine, especially with, the pandemic and all the chaos in retail.
Right.
But this is where the relative performance becomes the engine for all that criticism from Wilson and the other investors.
Okay, here's the telling number. How did the broader market, the S&P 500, do during that exact same time, August 2018 to now.
And this comparison it's just brutal.
Yeah.
The S&P 500 rose by 138%.
Wow, 138%. So Lululemon's 50%. It's just dwarfed.
Completely. The underperformance isn't just a little lag, it's an 88 percentage point difference. It's staggering.
It really is.
And it just transforms the whole narrative from, a respectable return to a failure to capitalize.
Right.
When the whole market is surging like that, shareholders expect a premium brand like Lululemon to beat the S&P 500, not trail it by almost 90 points.
So if you're a big institutional investor, that 88% gap is it's a massive opportunity cost.
Huge. You would have been so much better off just buying a simple index fund.
And that just gives critics like Chip Wilson all the ammunition they need.
Of course. The data basically validates the argument that management failed to execute or innovate or adapt. It makes that investor relief rally make perfect sense.
It definitely makes the desire for a change understandable. But as we promised, let's go deeper. Because replacing the CEO is, maybe too simple if the underlying problems are systemic.
Absolutely. It's a very convenient narrative to blame one person.
So let's pivot. What are the sources saying about the deeper issues here?
Well, Lululemon is basically fighting against two really powerful external forces right now.
Okay, let's start with the first one. The economic headwinds.
The conditions for selling expensive, discretionary stuff they're far from ideal. You've got inflation that's eroded people's spending power.
Right.
Wages haven't really kept up with costs for a lot of people. So when a family has to tighten its budget, what's the first thing to go?
The non-essentials.
Oh.
The $120 yoga pants.
Exactly. Lululemon's whole business is built on people having extra money to spend, and that extra money is it's constrained right now.
So that's the macro pressure. What's the second big threat?
The competitive landscape. Specifically, the explosion of online retail and fast fashion.
Okay.
This is a structural change in how people shop. Younger consumers especially are driven by these super fast trend cycles from social media.
They need to constantly refresh their look.
Constantly. And fast fashion retailers let them do that. They can stretch their money so much further by buying a lot of cheaper items frequently instead of, investing in one or two expensive pieces from Lululemon.
That makes a ton of sense. I mean, when you really look at apparel, there's only so much true innovation you can do before everyone else just copies you.
Right. So eventually, the whole industry gets pushed into competing more and more on price.
And that's Lululemon's weak spot.
It hits them right where it hurts. Their entire brand is built on the idea that they don't compete on price. They compete on quality, on performance, on status.
But that perceived value difference might not be big enough for people anymore.
Not when the price gap is so huge. Which leads us right into the threat of the so-called dupes.
The duplicates. The market is flooded with them. How exactly are they attacking Lululemon?
Well, the dupe market is incredibly agile. It's basically engineered to piggyback off Lululemon's success.
They don't have to do any of the hard work.
None of the R&D. They just take Lululemon's winning designs, the fit, the stitching, the feel of the fabric. They reverse engineer it, find a good enough material, and flood online marketplaces in weeks.
So they're selling the look.
They're selling the aesthetic and the general function for, a fraction of the cost.
Which means Lululemon's huge investment in product development is essentially subsidizing the dupe market. They take all the risk, and the copycats reap the rewards.
Precisely. And that is a profound structural challenge. It's a struggle that, even giants like Nike have had to deal with. How do you justify a premium price when something that looks and feels pretty similar is everywhere and so much cheaper?
Let's bring in a financial number to really drive this home. Their gross margin. It's currently at 58.35%.
And you really need to put that number in context. A gross margin near 60% in apparel retail, that's elite. That's top tier.
What would be a more typical number?
Many big retailers and department stores are lucky to be in the 30% to 40% range.
Yeah.
Lululemon's margin shows just how much pricing power they've had historically.
People are willing to pay for the quality and the brand.
Gladly. But that huge margin that gave them so much power, now it's a giant target on their back.
For all the price-cutting competitors.
It creates this vicious cycle. That 58% margin is proof of their past strength, but now it's the exact gap that every fast fashion brand wants to exploit. They can sell a look-alike product for half the price, still make a decent margin for themselves, and put Lululemon in an impossible position.
Because if Lululemon lowers its prices to compete...
That massive margin, their whole competitive advantage, it just evaporates overnight.
That's a serious dilemma. It
Mm.
it, it kind of sounds like maybe the criticism of McDonald is a bit unfair.
Well, that's the nuance here.
Even the best CEO can't stop a recession or, dismantle the entire fast fashion industry.
And that's what the sources suggest. Yes, the company underperformed the S&P, which validates the critique of management's execution. But the reason the stock has suffered so badly this past year is mostly external.
The brand is still strong.
The brand is strong, but the question is whether that strength is enough to get people to pay the premium price in this economy.
Which shifts the focus away from blaming the past CEO to defining the challenge for the next one. So if you're looking at Lululemon as an investment, what is the major test ahead for the new leadership in 2026?
The test is all about psychology and economics. The high price is the barrier right now, we know that.
Yeah.
So the fundamental question is, when the economy gets better, will people come back to Lululemon?
Or have they gotten used to the cheaper alternative?
Exactly. Have they been permanently conditioned to buy the dupes, and will they just spend their extra money somewhere else?
It's about the stickiness of that new habit. If the dupe gets you 80% of the way there for 40% of the cost, that's a tough value proposition for Lululemon to beat.
It is. The new CEO can fix the supply chain and roll out new colors, but they can't force a consumer to choose a $120 pant over a $40 one if the difference doesn't feel essential anymore. They need a real game changer.
Which brings us to the final investment advice from the source material. Balancing all this out, what's the takeaway for investors?
The advice is pretty consistent. Don't rush in and buy the stock just because there's a new CEO coming.
The rally might be premature.
It might be. A leadership change is no guarantee of better performance. And given these deeper systemic problems, the sources conclude that things could still get worse for Lululemon in 2026.
The external environment is just too big of a storm.
It's overshadowing any potential internal fix. The smart move is to be patient. Wait until the new CEO actually lays out a real strategy for how to solve this pricing and dupe problem.
This has been a really fascinating look at the whole situation. We started with all that intense management drama, the excitement over the CEO leaving and Chip Wilson taking his victory lap based on that huge S&P underperformance.
But we end on this macro reality check. New leadership can fix execution, sure. But the core problems, the weak economy, fast fashion, the endless wave of cheap dupes, those aren't going anywhere.
They'll be sitting right on the desk for the new CEO on day one.
Exactly. Those problems don't just disappear on January 31st, 2026.
And that leaves us with a final provocative thought for you to chew on. We know Lululemon has this great brand and an incredible gross margin near 60%. But if the entire market is shifting to price competition, and if these dupes are good enough for most customers, how much is that high margin really worth if your sales volume keeps shrinking?
And the real question for that next CEO is this. What specific innovation, I don't mean a new color, I mean a real proprietary breakthrough could Lululemon introduce that would undeniably justify that premium price tag in 2026? What could convince people to bring their wallets back from the cheaper alternatives? That's really the test. That's the challenge for survival.
Thanks for diving deep with us.
Till next time.